Sean Haney here, broadcasting from Grow Canada in Calgary, Alberta, and I'm joined right now by the President and CEO of Farm Credit Canada. It is Michael Hoffort. Hey, Mike, how's it going?
It's going well.
Hey, nice to chat with you. So, you enjoying Grow Canada?
You know, it's a great event. It's for the crop sector in Canada. If you want to get to one event, I find that this is a really valuable one to connect with people from across the industry and across the country. So yeah, so far so good.
Now, there's a lot of exciting things happening in our industry. That's very clear. And to be in agriculture, you have to be optimistic. Mm-hmm. But I don't think we can ignore some of the challenges that have been out there in terms of farm profitability this year. Really across the country, Farm Credit Canada owns a significant amount of the lending book. How do you look at the situation right now in farm country?
Yeah, it's like, you know, this has been a very, very challenging year from coast to coast, whether it was drought in the prairies or wet in the east, and then we had a hurricane hit the Atlantic, and then we, of course, have had a really difficult fall for a lot of people with harvest, going to wait until spring in some areas. And so we're monitoring the financial situation. We're coming at it from a position of strength, which is good. And so, and in areas where it's challenging, I think us and other creditors are actually reaching out to their customers and saying, where are you at? How's it look heading into the winter time? And what are, cash flow perspective? The balance sheets are strong, so it's all going to be about cash flow. And then looking into spring on, do we make adjustments now, or do we want to wait it out and see how things kind of progress? But yeah, no, it's going to be a busy winter for us for sure.
What do you encourage your account reps to do? Do you encourage them to be like proactive? Because
sure.
I think there was a time where it was like, you're going to see the banker once a year, and here's how we did, and we sold our cow. You know what I mean? Like that relationship has changed a little bit.
I think it's really had to, just the complexity of farms, the size of the dollars at play. And the earlier people, I would suggest get together and kind of do an assessment and have conversations, with their farm credit relationship manager or otherwise. The more options we're always going to have. And so if it waits until April and all of a sudden we got a 5-alarm fire and we're trying to figure out how we're going to get the crop in the ground for next spring, that's not going to be good for anybody. So if we feel we're having some challenges, now's the time to talk. We're not going anywhere. This is our business. We're here good times and bad. We're a long-term lender. And so our encouragement would be, if you're feeling like, as you start to take stock and where you're at, come and see your relationship manager and let's have conversations early. And I would suggest that would be, probably good practice with anybody you deal with.
So when you're solely focused on agriculture, how do you diversify your book?
Well, the unique thing about Canada is it's much more diverse than people would recognize. If you think of our geography, it's huge, of course. The country is very, very broad. And then the various industries that make up Canadian agriculture give us a diversification factor that's unexpected. And so even if we're dealing with external regulatory type bodies or different organizations that are wondering that exact thing, we can really show a diversification factor, whether it's from supply management and dairy or poultry through into the crop sector, greenhouse. Just the variety of things that happen in Canadian agriculture provide us with diversification, including what we're doing in agribusiness and agri-food lending, which is, again, a diversification factor for our organization.
Yeah, and I've heard that there's an increased interest in increasing the size of the book in the area of processing. Yeah. Why?
The big thing is if you have a strong agribusiness and a strong ag food sector, I really think that strengthens the farm sector as well. And for the country to be able to achieve some of the objectives we have, whether it's the export objective, 75 or 85 billion, depending on which roundtable is put the number out, plus what we want to do with domestic food, Canadian food consumption, which is a really solid goal of 140 billion of an increase from 110. You can only do that if you've got some of these small, medium, and even large champions that are in that space. And so, we would have started down this journey in early 2000s. So actually, we have $5 billion of portfolio in that space already, and lend over, it's around $1.5 billion a year. And it's a growing sector. It's an important sector, and it kind of rounds out the value chain as it relates to Canadian agriculture.
Yeah, a lot of times we talk about attracting investment in certain sectors. We talked to Bill Gruhl from Protein Industries Canada yesterday. And talking about the things that he is doing and deploying all that money with PIC. And one of the things is that if there's not money accessible, it's really hard to set up a processing plant.
For sure.
And,
yeah.
and so a lot of times, I think whether it's farming or processing, there can be frustration because the bank will lend when you don't need the money. And so it's really hard to kind of figure out. And I think in tough times like this on the farm, having a really good relationship with that farm manager is absolutely key.
For sure. Yeah, I agree. And looking at what PIC's trying to accomplish and some of the organizations that they'll fund is how do you take some of those great ideas off the university research table, get into sort of an enterprise that's at earlier stage, and then develop into some of those champions is really going to be critical. And there's different types of funding that are going to be necessary for that, and organizations like FCC can participate. And then that does drive down into the farm manager and of today and in the future is it's increasingly the complexity of those jobs, the differentiation with the multi-family, multi-generational farm structure in terms of who's doing what. It's one of the richest things that Canada has is this family farm model with some of the entrepreneurial spirit and different roles, different interests that come together on these farms to make them extremely successful. And seeing that evolve and mature is really quite interesting from a farm management perspective.
So the skills to put somebody into that account manager position, what skills are you looking for? Because because the relationship has changed, therefore the skills that person has to have to change.
I would agree. So, I cut my teeth in 1988 as a relationship manager. We would have called it a credit advisor at the time, and pretty much exclusively we were often rural farm kids that had gone through the university programs and kind of come up through the ranks that way. Now we would, we're a little more open. We're looking for, again, some of those ag grads for sure are a key hire for us. But a lot of times, if you're a business grad or a commerce grad with some either rural background, farm background, or just an interest in the food industry and Canadian agriculture, we'll bring them in and we'll train them on what they need to do from a financial perspective. But it's really having a keen interest in terms of just the industry that we serve, believing in kind of the Canadian agriculture industry and the farm, the family farms that make it go and how you can contribute to that. And so it's a lot about attitude and smart, and then train for the financial skills you need. And if you're from an urban perspective, we'll go out of our way to for sure provide base ag training. And so we've
how
got
do
some.
You do that?
It's I'll use we have a customer service center located in Regina, another one in Moncton, and it's a variety pack. Like we're doing farm tours. If there's a show, and use the example, our head office is in Regina, whether it's Farm Progress or Agribition. Like we've got our newbies that maybe don't have the ag background out walking those barns, seeing what's happening there, talking to producers to understand. And so it's just kind of best efforts in a lot of ways. For our relationship managers located in the country, you're on those farms all the time. They're out on the road 2 to 3 days a week, and so it really comes quick and natural. But mentorship models and different things are employed, which just would be basic stuff.
Yeah. So with FCC's spot in the industry from a primary lending perspective, is there a saturation point? Like, is there a point where the book can't get bigger, or how do you manage that?
For us, we're kind of like our market share is holding pretty steady, and so we would be the most significant lender in the Canadian ag. Somewhere in that 29-30% of the farm debt in Canada would be held by our organization, and we're kind of growing with the industry. And so the thing with our perspective and my perspective as a leader there is that there's enough to go around. So we'll grow with the industry. We'll look for ways to partner, whether it's with credit unions or other banks where it's possible, and then by getting into the agribusiness and agri-food side again, we're not the dominant player there. We're finding ways to provide support with other FIs where we can, and then actually really focusing down on that small medium where there's maybe a little less access to capital, as you mentioned. They haven't maybe perhaps made it yet. And so there's a role there for us. And so that's mandate placed for us, whether it's that small, medium space there, that young next generation of agriculture producers coming in. We'll find ways to support, and we're growing with the sector as it goes. And it's a sector that's on the move.
Well, I really think the attitude in Canada is shifting from the standpoint that with some of the trade disruption that we've had as of late, there is it's sort of been a bit of maybe a wake-up call is too strong, but it's created more awareness that we need more domestic processing capabilities. Now, that idea and that concept is great, and they're words, and I think we can all rally around it. But if we don't have institutions that are willing to lend the dollars to that sector, it'll never happen.
Agree. I think if you look at internationally and kind of moving from that commodity exporter to maybe being that ingredient exporter, and just how that evolution will happen, it's not going to be an overnight thing. We'll probably still ship canola seed, for decades to come, and there's nothing wrong with that. But when you look at what's happened in the trade market, thank goodness for all of the investment that went into some of the canola crush plants now, because
record crush.
It's just it's I don't save the day might not be exactly the way to say it, but it really helped with the giving us export options that we wouldn't have had otherwise, or to deal with that crop that we wouldn't have been able to have dealt with it if it had been straight commodity kind of based business. So, what's next for us, and what's that look like? Whether it's in the protein space in plant proteins, or is I really think there's still upside in the animal protein space as well. And so, what can that look like and stuff? So it's as much as this is a super challenging time, and you never want to discount that. If you think, if we kind of can think past this next several months, things are still bright. There's lots of opportunity, and then it's kind of work with today and get through this, and then what's it look like for the future, and how can we make it, make a stronger, more robust industry.
Well, Michael, thanks a lot for joining us today, and enjoy the rest of the Grow Canada conference.
Thanks for having me, Sean.